morning, everyone. Hi, thank you for joining the webinar on a Sunday morning. Let me first give a brief introduction about myself. My name is Sabuj. I am a futures full-time trader for the last 5 years. And recently, I have started a trading training course for day traders based on price action through Greenback Riders Trading Academy. And on this YouTube channel, what we try to do is we try to give basic price action ideas about the chart, how to look at the chart, how to read the chart, and then different strategies and snippets based on that, right? Today, what we are going to see is how I plan my trades based on the weekly chart, the daily chart, the monthly chart. So there is a process that I follow. And if I am doing it on a Sunday and I'm planning for the whole week, I start with the monthly chart, then I come down to the weekly chart, then the daily chart, the 4-hour chart, the 1-hour chart, and then the intraday analysis. So that is what I do every Sunday. Now, when I am within the week, say Monday, Tuesday, Wednesday, and Thursday, I start from the daily level because my weekly and my monthly levels are already there. I start from the daily level, see what happened, and then come down to the 4-hour, 1-hour, and the intraday charts. I do not do support and resistance or markings on the 15 minutes time frame. My minimum time frame that I mark my charts on is the 1-hour time frame. Okay, so since today is Sunday and I want to do the whole week's plan with you guys, so let us start at the monthly level of the chart. So if you look at the monthly chart, you will see that there have been a wedge here. There is a wedge here which is getting formed. There is another wedge that got broken out from here. And then on top of this, we have another wedge which is forming, right? So what is a wedge? A wedge is a trend line. When we are looking at a bullish wedge, we are looking at the top trend line. When we are looking at a bearish wedge, we are looking at a bottom trend line. So here, this is my wedge line, right? And a wedge is formed with 3 touches. So we have 1 touch here, we have the 2nd touch here, we may have the 3rd touch here. If you see here, the wedge broke out from here. So we have the 1st touch here, the 2nd touch here, the 3rd touch here, and the breakout happened. Now, what normally happens in a breakout is if a wedge has broken out and the breakout is successful, it normally goes to a it normally gets a 1:1 target. So if we look here and if we are very conservative and say, okay, this is the leg only, then this 5689, 5690 area will be the 1:1 of this whole move, right? Now, if you see here, there is one. This is one developing wedge. This is the actual wedge, and this is another developing wedge, right? 1 touch, 2 touch, 1 touch, 2 touch. So we still do not have the 3rd touch here. If you see on the monthly chart, we had 1, 2, 3, 4, 5 months of consecutive bull bars, which is strong and closed on their high. And then we have a sudden reversal candle, which is actually a engulfing outside down bar, which got created. So right now we have a IOI pattern, which is a breakout pattern, right? And what normally happens is the bulls who bought the close of this bar, since this is a monthly bar and there are machines and algorithms which do trade on the monthly bar, the bulls who bought here, they were surprised by this bar, right? And they started buying here again. If I remove this one and create a new one here, so if they started buying, if that was their first buy, and the bottom of this red candle or the black candle is their scale in buy, then you can see they have already reached their 50% target. They are break even and they are trying to move up. Now, where are we sitting? We are sitting in the 79% to the 89% trap zone. So these are trap zones, 79 to 89, 11 to 21. These are all trap zones. So I'll talk more about it here. So we are in this trap zone here. If we cross above 5270 and hold this level, bulls actually will try to get to the high of March. Why the high of March? Because their first buy was here. They bought it here. They bought here again, they want to come to the top of this top of the March close, at the March close, so that their first buy gets a break even and they get equal profit on their scaling buys. Okay, so this is their target. Once it can, even if we cross here at the end of the month, we sit somewhere here, right, with a strong bull bar. This will be a IOI setup. And the IOI setup is, this is as I learned from my mentors. This is an internal bar, there's an outside bar, this is another internal bar. This is actually a breakout mode. Although we are sideways, and the breakout can actually lead to the top of the channel, we can break out of the channel. If we break out of this channel and there will be another wedge breakout that's happening, at that point of time, we will have to keep an eye on this particular line, because these two will now create a dueling line. What will be a dueling line? What is a dueling line? Once we are in this area, this line will act as a support and this line will act as a resistance, as long as we do not break out of both of these. My first target on the monthly chart still is the top of March, and then we will see what goes on from there. On the downside, on the monthly chart, this I would say the close of this candle 5065 should not be given up. Correct. If 5065 is giving up, then on the monthly chart we may see again it come down and retest this particular line. And if you look at this now, if I remove everything, you will notice, if I remove this wedge also, we are already in a channel. See, this wedge line and this wedge line is already creating a channel. Okay, and how I saw this was, I saw this even at the beginning of the month, is when this wedge was formed, this is how I predict or extend my channels, right? When this trend line was forming, what I did was I took this, I pasted this line again, I copied this, and I took it to the next high that we had here. Okay, and that is how, if you see, we have this formation now. We are almost in a channel. If I do want to do the perfect wedge, it may not be a very parallel channel, but yes, it is a channel. So we can say that, okay, this was the spike and this was the channel, and we are just moving within this channel, and this is a sideways movement, right? So on the monthly chart, we had one leg, this was one leg up, down, second leg up, down. We have the third leg up now. This was the third leg, and this came down. If we go over this, above this candle, we will start the fourth leg again. And then we may break out, we may not break out, right? So that is how we will have to look at these things. So based on all this analysis, if I go back to my document, this is what I noted down last night, right? On the monthly chart, we have a wedge breakout and another wedge forming. We have retested the bottom wedge. So if we go back here, we have retested this bottom wedge and trying to go up. And the bulls want to reach the top of March 2024, which is this candle, in order to break out on their first order and make money on the scale-in. I am considering this started scaling in here. The wedge breakout target is 5692, which is the 1:1. That's too far. However, for this month, the second target is 5440 once we cross above March. So that will give me the completion of this particular candle. Now, what happens is, many times, apart from the wedge breakout fibs also, this is a surprise bar, right? If the bulls can manage and hold up to here and then hold this line, what the bulls will try to do is they will try to double this range. They will try to double this range, and this will be their target on a monthly basis. But again, that is too far away. We will cross that bridge when it comes. But right now, on the monthly chart, our target is 5308. I hope that makes it clear. If anyone has any questions, please put in the chat. This is what we are looking at on the monthly chart. Now we will go down and look at the weekly chart from here. Before that, I would like to pause and see if anyone has any questions. Please type it. I'll wait for half a minute. Okay, everything looks good. So let us now go down to the weekly time frame. Okay, once we are here in the weekly time frame, what you will notice is this is a tight bull channel. Okay, let me remove all drawings here. Let me remove all the drawings here and let me bring up my document here. Yeah, what you can see is if this was the full leg on the weekly chart, this was a pretty big leg, right? And this was the pullback. I will show you where the resistance is lying, but prior to that, this leg can demand one more leg sideways to down. Okay, as soon as we come below the low of this candle, we will say that there is one more leg getting created as soon as we come one tick below 5155.25. Correct. But interestingly, if I draw the fib here from the top of this swing to the bottom of this swing, this is a trick that I have learned from my mentors. Okay, this 79 to 89% area on the top, again the 79 to 89% area at the bottom, the 79 to 89% extension, and the 79 to 89% extension on the top. So 0.11 to 0.21, minus 0.11 to minus 0.21, and then 1.21 to 1.11. These are the four trap zones. If you look at the weekly chart, we are already at the trap zone. Now, where are the bulls waiting? Where are the bears waiting? So this was sell zone. This was the resistance on the weekly chart, and see what happened. I just took the top of this candle, and this is my actual order block. If I have to do it the exact way, this is my exact order block, or the resistance which the bears broke, or the support which the bears broke and got a big leg down. Okay, so this is telling me we have been trapped here. It is highly possible, is very highly possible that now we will get this second leg down. The bulls who bought here, they got trapped here. They bought here again. They are break even and they have come and hit this area. So now you see how it is coinciding with the resistances that we have on the daily chart, right? So at this point of time, I would say that this 5285 to 5263, this area will still have bears. If somehow overnight overnight today and tomorrow, if we cross over this and stay above this, this is the target that we can achieve. So what you can plan for is, if you play options, if tomorrow afternoon at 4 p.m. the price comes and stays here, and most of the day it stays above the 5295 line, you can buy a weekly call option on SPY targeting this area. Okay, or on SPX targeting this area. On SPX, this area will be around 5321, right? SPX is normally 20 points below the ES move. Okay, so this is what I'm seeing here. Now, where is the support here down? My first support down here is, if you see, I won't draw a line here, I would rather draw a box. My first support here is this zone. This is my first support. If I change this to a buy zone, this is my first support, right? So it is highly possible that over the next 1 week, we come down here, or even there is another support here, which is these two. We even may come down here, somewhere here in 52.6 to 5193 area, and then we can go up again. Okay, as long as the low of this candle is not taken out on the weekly chart is still bullish. But we need to remember that we have hit a strong resistance here, both on the monthly chart as well as on the weekly chart. Okay, but we are in a super bullish market. As I was saying, if we draw the parallel channel here, if we consider this is the spike, and then we started forming the channel. So this is our channel, right? Now, the first break of the channel on such a strong move normally does not hold, and it actually goes and goes and touches at least the high, or it creates a higher high. So if it was to create a higher high, first I have to cross this 5332 level, right? So that can be the target. So the bulls are trying to come back up here in this area. The bulls are trying to come back up here in this area, get profit on this buy that they have done down here, and they want to if they have the contract that they have bought here, they want to break even here. So that is how the market is moving now. However, we need to remember that this 5291 to 5254 is the trap zone, and we came to the trap zone, we got rejected. If we start coming down below the 3236 area, we'll see why that is important in the lower time frames. The 36 to 32 area, if this breaks down, we may actually come down to the 2021 area, 5221 area, followed by the 5208 to 02 area, and then further down. We will look at that as we go through it. So what is the weekly chart telling me? The weekly chart telling me this may be a time when the bulls will be trying to go up and complete this phase, and the bears will say that, okay, you have reached a resistance, you have got enough profit, we need a second leg down, because some bears who bought here got trapped because of this inside bar. They tried to break even here again. See, they came down to the 21% of this whole move, right? This is their support. Okay, so the bears who were here, they are still trapped. They are still trapped. If they now start selling here, or if they have started selling here last week, then 5106 will be their break even, and that can be another point of bounce. Yes. They started selling here. Yeah, 5112. And remember, 5112 to 5113 has been a consistent resistance over the last 1 week, which we finally broke out and went down. Correct. Now, one more thing that of notice was that over the last couple of weeks, the RTH bulls were full. Okay, first let me say what is RTH and ETH. I will put it down in Excel maybe, so that everyone is aware of the terminologies that I'm using. Just give me a minute. Okay, so RTH starts from 9:30 a.m. EST, okay, and continues till 4:15 a.m. EST, right? So this is the RTH time hour. RTH means regular trading hours, and this is with respect to the New York timing, right? So if you look at this time zone, this whole time, you will see on the 5-minute chart, you will get 81 bars every day, correct? So based on these two time frames, the 81 bars are formed. Now, in the futures market runs 23 hours every day, from 6 p.m. in the evening today. Say we are on Monday, so it will start from 6 p.m. in the evening on Monday, and it will continue till 5 p.m. in the afternoon on Tuesday. That is our ETH, or our Globex hours, ETH. So that starts at 6 p.m. EST, and it goes out to 5 p.m. EST the next day. So if you can see, the RTH chart is a subset of the ETH chart. And then again, we talk about Globex hours. Globex hours is when the ETH starts, that's at 6 p.m. EST, and ends when I hit my RTH open. So that is my Globex hours. So we have three kinds of combinations here. We have the Globex hours, which is from, say, tonight at 6 p.m. till 9:30 morning tomorrow. The RTH will start at 9:30 in the morning tomorrow, and it will end at 4:15 in the afternoon tomorrow. The ETH, the complete ETH, the whole superset, will start at 6 p.m. tonight and will continue till 5 p.m. tomorrow. Okay, so these are the different hours that we look at. We look at the high and low of this when we start the RTHRs. We look at the high and low of this when we start the RTHRs. And there is a big chance that during RTH, either the high or low of the Globex hours gets broken. However, remember, Mondays are typically very slow days. They can be full of traps. They can be full of places where there are multiple reversals. There can be a choppy or a trading range day ranging between 20 to 30 points. So that is how markets typically are on Monday. And if on Monday we get a good signal bar on the downside, maybe the second leg of the bears are already starting. Right. So that is how I'm looking at it. Now, so that is all that is coming out of the weekly chart. If we go back to my document here. That is the same thing that I put down. On the weekly chart, we have reached the bottom of the resistance area where we also have the trap zone 57 to 95 actually. Now, another thing that I look at is this is, you know about Bollinger Bands, right? Now, I have my own version of Bollinger Band. Bollinger Band is basically constructed around the 25 SMA. Okay, as a price action trader, the midpoint that price action traders go by is either the 20 EMA or the 21 EMA. Now, what I do is I go by the 20 EMA, and based on that, I create my standard deviations. So what is the Bollinger Band? Bollinger Band is your 25 SMA. This is the line. Then it does the standard deviation 2 on the top and 2 on the bottom. What I do is I have my own code for this, which I call EMA standard deviation. Okay, the blue line is my EMA. It's the 20 EMA. This top line is the first standard deviation. This is the second standard deviation, third and fourth. Again, -1, -2, -3, -4. These are the four standard deviations I have on both sides. Anywhere between 2 and 3 creates a reversal zone on any time frame. If you go and see, anywhere between 2 and 3, it creates a reversal zone. At one go, it does not cross above this. Okay, there is always a pullback when you come to this region. So as a result of which, even if we keep coming here, this is my second SD. We met the first SD on the, we had a second SD on the top at 6.2 at the beginning of the week. And now as we have moved up, this is 5364. This is where the market may try to reach if we keep going up. Okay, this is the second SD area. I would not again draw a line here. I would rather draw a box here. So this is the area where the bulls may try to reach after it has crossed above this, right? So right now this is not our target. This will be a target once we have seen that, okay, all these resistances have been taken out. If we want to create a new 88 all-time high, maybe this is where ES mini wants to go. Okay, so that is how I use these lines. And most of the time, you see, if the market is super bullish, it keeps on closing above the 1 SD. It keeps on closing above the 1 SD. Now, it has not yet reached the second SD, but we are above the 1 SD. As long as we now see again, this resistance area is also falling exactly at the 1 SD line. Okay, so if we keep on holding this over the week, there's a big chance that we may actually go and hit this. However, again, we need to make sure that all these areas are getting done first before we go. But we may get another second leg. We may come down here to give these bears a respite, and based on whatever fib levels we bounce again from, that is the time we may go and hit inside. Okay, but we are still in a bullish market. There is nothing to sell here. This was just a pullback out of this channel, and there is a big chance that we can go up, provided the bears are not too strong here. So everything depends on how we treat the high of Friday, which was at I think 64.5. Yeah. So we have to see how price reacts there. If overnight, if we keep rejecting this line, if overnight bulls try to push it up and we keep rejecting this line, and then in the RTH session we come below the close of this, there is a good opportunity of short in this area. Right. So this is what the weekly chart is telling us. Now let us go to daily. This will make it more interesting. We are still above the 1 standard deviation on daily. Now, this is the last time frame where I use the Bollinger Band. Okay, the EMA Bollinger Band. I do not use it on my intraday charts. It makes it too clumsy. And I do not care about the 5-minute Bollinger Band. My support resistances are enough to tell me that. I look at these things on the higher time frame just to keep a structure in mind that, okay, this is where the market wants to go. If it has gone there, I should be taking profit. There can be small reversals from there. There can be a couple of legs down from there. So those are the things that I look at. Now, let me remove all drawings from the daily chart. Okay. If I remove all drawings from the daily chart, the first thing that pops out to me is this wedge. Correct? So we had this, we touched this wedge on Friday, tried to go above it, and we dropped. This was, I would say, profit taking on the bulls on a weekly chart, but this is my resistance. Look at the wick. This is the resistance. So we know that a strong, whenever we find a strong candle, that's a breakout. That's breakout. However, when the wicks are formed, that's a failed breakout. So we look at wicks as a form of failed breakout. This is a sell zone. Okay, so now whatever happens, in order to go over this, if Monday does not close above it, we have a problem. But then Monday may be a slow day, and very highly possible Monday will create a trading range in this area, in this whole area. Go up, come down, go up, come down. And that can be a very possible case, right? And then we'll have to look at the end of the day if we had a micro double top on top. And then if this is the neckline, as soon as we come below this, we will short and try to get at these targets. Correct. Any questions so far? Can we say double top is formed and DT started? Which time frame are you talking about? I see a question. Can we say double top is formed and double top started? That was weekly. Let's quickly go back to the weekly chart once. 1 week. If you're talking about this line, yeah, you can say that. You can say that, but then for this kind of a double, if it was here, I would say yes. But since this is here, I would say this is more of a support resistance play rather than a double top play. Okay, so the downtrend to start, see, right now we do not have any indication of downtrend. The market is still very bullish. It is going up. It wants to go up. That is what these charts are showing us. Okay, even if we come down, there can be a couple of legs pullback on the 4-hour chart, on the 1-hour chart, be in a trading range for a couple of days, and then we move. Let us quickly also look at if we have any major news item next week. I did not check that yet. So this is where I check it. I look at Market Watch. You can also look at it. I sometimes look at forex.com also. Why do I look at forex.com? The reason is it gives me the timings for when bond auctions are going to happen, when different, mostly I'm interested in the bond auctions for the USD, and those times I normally stay out of the market, see how the market has moved, if the look at the bond auction results and see how much money went inside that. But then I basically depend on price action, because as price action traders, we do not consider news. We stay out of the market during the news if we can. And we just look at how the market reacted to the news rather than the news itself. It may be a very good news and the market may fall 100 points because the bulls had to take profit. Right? If the news can be bad and the market can go up 50 points that day. So you have to look at how the price is behaving after the news came out, the reaction of the price with respect to the news, and then trade accordingly in that direction. So if we look here, oh, Tuesday we have PPI. So very highly possible tomorrow will be a trading range day, right? So we have PPI here, we have PPI here, and then Wednesday we have our beloved CPI. So these will decide which way the market is going to move. Okay, it's a jam-packed week. We have initial jobless claims. We have these are okay, these are okay, these are okay. Now again, these guys start speaking here, and then again on 10 on Friday we have this US leading economic indicators. Okay, so this 10 o'clock last Friday was where the drop started. Right, we went up to 64.5 on the same candle, and then we bounced down. So yeah, tomorrow expect a very rangy day, between 20-30 points, and then this will be the market movers on Tuesday and Wednesday. Once 8:30 happens, I normally do not trade before 9:30. I do not trade in the ETH hours. My trading hours are between 9:30 to say 11:30 to 12, and then again between 1 and 3. I do not trade power hour. Okay, the market can go 100 points, it has to go without me. If I am not in a trade already, I will not initiate any new trades after 3 p.m. And on Fridays, if I am not in a trade, I do not initiate any trades after 12 p.m. So that's a timing discipline I follow, based on the fact that I have seen that most of the time I lose money in those times. Okay, so I stay out of them. Okay, so that is how the news goes. Yeah, so this is the let's get back to the daily chart. Now, if we see here, if I draw my boxes and resistance lines, again, this is my primary order block, right? We try to go over the order block, we failed. Again, we try to go over the order block, we failed. Now we have created this. And if you see, the good part is we closed inside the order block, which means the bears are not that strong. So as long as the overnight session does not show me any strong bear move, or as I said, tomorrow may not be that day. Tomorrow we may just chop around in this area, and then all you will get is 10 points up, 10 points down, 20 points up, 20 points down. So that, and you will be able to scalp. That may be the only possibility tomorrow. But after PPI and CPI, we'll have to see how these areas are performing. Right? We still have a gap here. This is a gap. Let me change it to BISO. This is one gap here. We have a huge gap here, which they tried to mitigate but could not. So mitigation will happen only if there is a body closing below this area. Okay, we do not go by wicks, we go by bodies. So if you see, the gap that I drew is from this body to this body. We stayed above the gap, and we came and closed inside this area. So to make it more perfect, this is the exact area. So if we keep staying here, and we do not break down the 3.2 to 3.6 area, we should be still ranging here. And if we keep on ranging in this area and are close somewhere in between, and if PPI and CPI supports, we may actually go ahead and see a new high. Right now, if I draw my fibs here, if I try to draw my fibs here, let's see what the fibs are saying. This is my fib here. So right now, what do we have? We have one leg up, one leg down, one leg up, second leg down. So two legs up, two legs down is done. Now here we have the breakout, right? So if you see, this is my breakout line. This is where we broke out. Once we broke out of there, we went this far. Now, let us see if the bull started buying here and they broke out here. They will try to reach this area, right? Maybe this is their 1:1 target. And this also coincides with our daily order block. If we go above and hold it, if we can break out of this area, again we can come somewhere between these two areas. And I will mark this again as a sell zone. Okay, so this will be how the week will the daily chart will move. And on the downside, I will say this is my main support area right now. Correct? Why the main support area? This is where the leg got created, and we got a new high. We created a new high, right? And we have two bull bars after this. So which is telling me that this is a pretty strong area. Even if the market comes down here, we can bounce back from here. So this may happen right after the PPI or the CPI. Market may come down here, retest this, and then keep going up. Once the market comes down here, or even below this, comes above this and crosses 52.02, I will consider that as a sign of a failed breakout, and the RTH time will have a good rise after that. Okay, provided that 5208 to 5202 area will hold. So this is what the daily chart is telling me. Now, if I bring my trusted standard EM standard deviation here, okay, if you see, this is where my 11% is, right? This 5304 area, which is right below the resistance. So if we can cross above this, we can get above this 1:1, the 5277 area. The next target on the daily will be the 5304 line. And then 5304 line, if we cross, we are again in the trap zone. So very careful here. If we come and close a strong candle below 5304, then this was a false breakout. Correct. So always concentrate on this 0.21, 0.11 lines, both on the extensions and inside your 0 to 1 fib levels, because those are very important areas that you need to look at. Now that we know this, and we know that 5232, see again, 5232 is a strong support, and 5232 also has our 1 SD. That is why I'm saying that it should not break down this area. If this area breaks down, we can see lower levels, 5113, 520, 5208, 5213. All those levels will become available for bears to test. Right now, let us go back to the 4-hour chart. Yeah, this is my 4-hour chart. This is my 4-hour chart. Yes. Now things become much more clear. Let me zoom out a little bit. These are my major support areas, right? This is a breakout line. This is another breakout line. This is another support. Now, what you see here is this is actually a breakout which the bears tried to fill in. And now we have created a kind of a negative gap here. Not exactly a negative gap, but if we go by conceptually, then this is a negative gap. Plus, on top of that, we are on the top, we are in this bear channel, right? So there is a good chance that if the next 4-hour bears come down here, which is again in our 523 to 36 area, they will get a bounce here and they will try to reach the top again. Okay, but they may get rejected here. If I get a double top here and then we break down this channel, maybe we will have a deeper pullback to 5227 to 5225 area, and further down to the 13 to 18 area, right, in this area. So that can happen, and that can actually start the second leg of the weekly chart once we start doing that, right? But that will take some time. It is not going to happen immediately. The weekly chart, I think, will start somewhere around here. Let's go back to the weekly. What is the bottom? Oh, we are far, far away. 5157. The bears will have a lot of work to do. And again, everything depends on PPI and CPI. Prices have not calmed down anywhere. Oil prices are still going up, food prices are still going up, although they do not consider food as a part of CPI. I don't know why. But yes, I do not see inflation to go down anytime soon. But again, after this PPI and CPI, Powell will come and say that, okay, we are not raising interest rates again this time, and the market will go another 100 points up. That is also highly possible, right? So if you consider the election cycle, they cannot do anything drastic right now, right before the elections. So you can expect that this no increase in interest rates and the steady state of inflation that will stay till November or December before the election results are out. If the incumbent government wins, then they will do something. If a new government comes in, maybe the whole policy regime will be overturned and they'll start doing something completely different. Then we'll have to see which way the economy is moving, and you will find on the charts if something is going to take a turn, you will find it on the charts. Okay, so this is where we are right now on the 4-hour. We are within the channel. My concern is we had one touch, two touch, three touch. This is the wedge, so we may have a two-legged pullback down to the 5204, anywhere between 18 to 13 and 02 to 08. So if the two-legged pullback happens, we try to break down this channel for the first time, we failed. If the second time breaks, it may actually come down and retest these areas again. And remember, this was a breakout line right at 5213. This was a breakout line. Test of this line is also highly possible. Okay, maybe not tomorrow. Okay, so this is what the 4-hour chart is telling me, and then we will look at how things are moving in the upper direction. Now, at this point, what I do is when I make my plan, I try to find the points of confluence. At what areas my 4-hour, my 1 day, my weekly, my monthly, all are coinciding and saying that, okay, there may be bulls here, there may be bears here. That becomes a very strong buy or sell zone for me. Then I do these measurements, right? That, okay, if the bulls have bought here, where are they trying to go? If the bears have sold here, where are they trying to go? Every week, every tick happening on the chart is for a reason. If we are going above and closing above a breakout point by one tick, and then we have a follow through bar above that which is strong enough, even if there is a pullback, there is a higher probability that the market will go above and do a double of the breakout. It will double the range, that, okay, it broke out of this range and then it will try to double it on top of that. And that is how it creates a trading range. It creates a tiered trading range. We will call this as tier 1, we will call this as tier 2. When it comes down here, it may want to retest this breakout line again. And once the breakout line is retested, it will go up to the top. But if the breakout line fails and we close below the candle that created the breakout, that will define that it was a failed breakout at this point, and we may actually come down to the bottom of the previous trading range that got created. Okay, I will pause here for a minute again, and I'll see if there are any questions. Anyone, any questions here till now? Okay, I will continue then. So these are the support resistance areas on the 4-hour chart, right? Now, what you will see is these areas are very big. I mean, 3, 4 to 2, 1, that's a 15-point range. I mean, if you are holding a long here and it starts coming down, you have to your account will have to have the capacity to absorb that $750 drawdown on that will happen here, right? So that is why we try to bring down our support and resistance levels. We try to break these areas down further. Now, with this picture already here, I will go down to the 1-hour chart, right? Now, on the 1-hour chart, what I see is this is a breakout area. If you see, this is a breakout line. This is a breakout line at 5229. That's what we broke out of, correct? And this is where bulls should be present. If I am short, I would take profit here. I would take some profit here. I would take, and if it keeps coming down, I will take some profit here, right? But this strong bear leg is telling me the second leg is coming and we can come down here. However, if we do our fib matching, if the bear started selling here and the bears, let's be conservative, the bear sold till here, still then this 5216, remember I said we can come down anywhere between 5213 to 5202 area. So this area can be easily retested. And if you see the 5202 to 06 08 to 02 area again is falling in my trap zone. Okay, so this again will keep on working as a very good support zone. If this breaks, we come down to the 95 to 90 boxes, and then these are the different breakout points that we had on the 1-hour chart. Keep them marked. Do not play on the 1-hour chart. If you want, you can play. Normally, what I do is if I have to take options, I take it on the daily chart. I look at the monthly, I look at the weekly, I look at the daily. Based on that, I take options. I do not take options on SPX. I normally take options on SPY. Apart from that, I have my higher time frame support and resistances available on my chart. On the intraday chart, finally, when we look at the RTH 5-minute chart, we'll see what is the intraday chart. And based on that, I keep on playing that, okay, we came to the higher time frame support or resistance. What is the price doing here? Where can the price go? After a big drop, if you see that the price is refusing to go down any further and is continuously creating higher lows, although the bars may be in a sideways movement, but still you are creating higher lows, the bulls are actually trying to go to the 50% area of the whole drop, right? And that is, if you look at Friday's chart, that is exactly what happened. If you consider the top of the RTH time, which was around 64.5, and you consider the bottom, which was around 32.5, the middle of these two comes to 48, and we got that 48 line towards the end of the day, right? Okay, so this is again my buy zone. Okay, now this is done. Now I do not look at support resistance on 15 minutes. I keep the 15-minute chart open while I'm trading, but I do not look at support resistance on the 15-minute. The next thing that I do is I will go to the settings. I will change the symbol to RTH. Once I have my RTH chart open, I will come to 5 minutes. Okay, let me remove this thing here. The fib that I was talking about, the halfway back, market always has a tendency to come to the halfway back. See here, top to bottom, we got the top of it. We went above the halfway line, and then immediately we fell down. Okay, so this was a climactic bar. This was exhaustion. The market was trying to go up for long. Again, if you see on this intraday chart itself, if you see on this intraday chart itself, if I try to draw a channel, this is how I predicted the channel on Friday. So I had this, I had this. At that point of time, I had created this kind of a channel. Okay, now I saw that the market came down and this held. I pulled it down. I made into this, and this time we saw that okay, the market is actually holding on to this line. And then I had at this point in time, I had this low and this low. I connected these two lows. I kept the channel open. This was my highest high. I took it and I put it here and see what happened. We went to the top of the channel. We got rejected and came down. However, this whole thing is looking. It is going up, right? It's a bullish channel. Now, what is the angle of the channel? If we want to look at it,
Sabuj,
yes,
can you please zoom in?
I will zoom in. Just let me find out this angle. I will zoom in there. Okay, this is a 10-degree angle. This in no way a strong bull move, right? It's a 16-degree angle. The more I expand, the more it will happen. But there's a 16-degree angle, right? So this in no way is actually less than that. Yeah. So this in no way is a strong trend. So if we break down, this is looking to me as a very good bear flag. And how many legs did we have? We had one leg up, we had two legs up, and we had three legs down. If we start coming down here again, if I consider that this is the whole move, if I look at the 4-hour chart again, I think we saw that already. This was the whole move. This is an inside bar, but it has a very strong wick. So this is not a strong inside bar. So even if we are conservative, we start from here, we put the 50% line here. Again, see, we come to that 5220 area. Okay, so that is how you need to look at the charts and plan that, okay, if we cross this, this may be the next support where the bears will take profit. And where the bears will take profit, if the bulls think that, okay, this is right below the support area, there may be bulls present here, they will buy along with the bears squaring off their position. The bears will buy, the bulls will buy, and the market will bounce. Okay, and then if once it goes above this 5225 to 5227 area again, I will be bullish. My first profit target will be again the 50% line, which I will consider as the breakout point for the bears. Right, and if you're aggressive, keep these numbers in mind. Also, if you're aggressive, if you say the bears actually sold till here, you can see 50 to 10, hold a runner. If your account has the capacity of holding multiple contracts, hold a runner. And or else if you see it wants to come down, keep 5210 as your target and try and scalp if you can scalp till that point. Okay, so that is how I look at the aggressive targets and the conservative targets. This will be my conservative target if the bears want to come down 50 to 20. If the bears are aggressive, they will give me another 10 points and come to 50 to 10. Right, so that is how I do the measuring and stuff on this. Now, when we come to the 5 minutes, you will see we had a gap here. This was my close of Thursday, and we could not close above the below the close of Thursday. So we have technically kept this gap open. Right, on the RTA chart, we have kept this gap open. Once we come below this, or even this is my double top, right? So let me draw this. This is a micro double top. Okay, this is a micro double top, and if you see, every time we broke below this, we found bulls. There were no bearish follow through. Every time we broke below this micro double top, bulls came out. We broke below this micro double top, bulls came out, and that's how we created the higher high. So that micro double did not get taken out. So this is actually telling me this is a very strong support area. But if I get another leg down from here, one bar that crosses this, and then I get a follow through, even an inside bar will do. Bears may actually try to bring it down to these levels again. Okay, and these are my support areas. Bears bring it down here. If they are really strong, they can break it down and go farther down. But if they are not very strong, this will hold and we will go back and hit the top of the channel again. And there is always a possibility during the RPHRs that we will come back into the channel and we will try to break out from it. So we will have to see what setup it is providing, the chart is providing right at 9:30 in context with the last half an hour that happened in the ETA chart, and then take our trades. Or else you wait for 4 to 6 bars, 4 to 6 bars, because after the fourth bar, the market shows some sign of movement. Sixth bar is the 10 o'clock news, so you can wait for that news bar, see what happens in the news bar, look if there are any follow throughs based on a big move that you had, and then take your trade. So you can play it either ways. After bar six is the best trade. The most of the best trades happen after bar six. Okay, so this is how I charted my. I put my things here. I will show you how I do the support resistance on the intraday as well. So this will be my resistance area. Let me mark this as sell zone. This is my resistance area, my first resistance. This is another area of resistance that we broke down, right? I am not considering the top. This will be too big. For a 5 minute chart, this is too big. What I'll do is above this, I will draw another zone from the top of bar one to this. This is the gap that we could not close. This is the gap that needs to be closed before we even try to go above the top of Friday, right? And then keep moving from there. So once this does not happen during my RPH timing, or if it's not already above, we will not consider going long at this point, given the fact that we are at the bottom of the this is at the bottom of the uh, weekly resistance area, and this is the top of the hourly support area. Okay, so we have to keep in mind of these things. Now this is my another major low, so this will be a major support area. Okay, see how these are coinciding. We talked about 5227 to 5225, and this is showing me the 5227 line already, and then this is giving me the 5224 to 25 area. My next area, okay, this is not resistance, this is support. This is support. Okay, now this is another important line. We had a double top which we broke out of, and we could not close below it. So this still stays an important line. And again, see, this is in our 34 to 36 area that we saw on the hourly chart. Okay, so this is how we find the areas of confluences. One more double bottom, double top line is here. Look how this was a micro double bottom. This was another double bottom. We tried to break down, we could not, and we kept going higher, and we got that 50% line. Okay, so this will this area now completely, this 37 to 34 area, this will now work as your support zone. If we come down here, we will find that we have, these are my resistances. This is 5225, that's the bottom. And then my next one will be here. This is my other one. This is a higher high double top. Again, a very strong support area. See, 5215 5213, same area. So now see how it is coinciding with the higher time frames. How these are coinciding with the higher time frames. So these are forming your major areas of support and resistance, and probably your reversals. Now this is the next. I will keep this long here because 5200 to 5205. My area actually, which the bulls have been holding during the ETA charge, is 5202 to 5208. And below that, the bears have been holding here, the 51909, 91 to 87. So if we go here, this is 91. And if I come down to 87, I think, let's be approximate right now. And if we extend this down, yes. See, this is the area that they have been holding. I am not expecting market to come down and break through. If it does, it will actually initiate that second leg. Now, whatever this analysis that we did right now is good for now, right? We have the whole night happening. You never know what is going to happen in the Middle East area, if some bombing suddenly starts, if some country suddenly declares something. So there will be a lot of things that will happen overnight, right? So whatever plan I am making right now, I will come back tomorrow morning, look at the price action, see what has been done and what has not been done. And based on that, what I'll do is I will go back to my higher time frame charts. I will see, okay, what things are holding, what things are not holding, and I will decide that, okay, if it crosses a particular level, suppose it has come down, if it crosses a particular level, we will see that's a false breakdown. If it goes above and comes down, we will see that's a false breakup. Now, I will give you one trick. When you have such a long opening gap, okay, right at 9:30, you will see that you are too far away from the EMA. Okay, you are too far away from the EMA. As price action traders, as day traders, we do not initiate our trades too far away from the EMA. Given the fact, if we have gone up so much, there will be a good pullback. Wait for, if you're not, if see, we shorted here on Friday because I was confident about this area, right? That's why we took the shot. However, we will wait for, this can be a bullish day. I was actually expecting that this can go up to 5284 and even 5300, right? But normally what I do is I wait for the gap to close with the 20 EMA. Once that happens, then I look at the market and then I keep on trading. But Friday we just got the short from here, and our first profit taking, I think, was somewhere around here near the close of Thursday. Okay, so that was a good trade. But normally do not initiate your trades too far away from the 20 EMA. With regards to the 20 EMA, I'll show you one more thing on the RTA chart, which I missed and I noticed in the morning on the ETA chart 4-hour. You will see that since we broke out above the 20 EMA, the 4-hour chart has kept a gap open to the 20 EMA. We have kept the gap open here. We have kept the gap open here. This time, if we can hold the gap open, good. But if this time we cannot hold the gap open, we may actually be in that second leg of the weekly. Okay, and why this gap is important, or why 20 EMA is important? Again, let us go back to the weekly chart. Look where it bounced. It came back below the 20 EMA. It could not hold it. It went up, retested, and gave us this rise. So that is why the 20 EMA line becomes so important, right? You can use 20 EMA, you can use 21 EMA. Based on this line, I when I saw that if I can convert my Bollinger Band that we normally use based on the 25 SMA, I converted it to this, and that is how I found out that this is the standard deviation based on the 20 EMA has a better effect, a better analysis capability compared to the regular Bollinger Band that we have. Make sense? Any questions, please put in the comment, guys.
Hey, Sabuj.
So
Yes,
this
how are
is
you?
the kind of plan yesterday. I am not expecting this area to be broken down. If this area breaks down, we will come down to we have our levels, right? 511, 25 to 27, 5113 to 15, 02 to 08, and then 94 to 96, and then 90 to 87. These are the areas that we have. And on the top side also, so tomorrow is Monday. You don't have to do a lot of support resistance analysis, right? Mondays are mostly slow. They create trading ranges and keep doing that. Okay, but you never know. It's the market. Something happens and they will accelerate towards the next area of balance, to the next area of support, to the next area of resistance. So that is how the market will move. But we will keep our expectations straight. We will expect a trading range tomorrow, given that we had a big drop after such a climactic rise. And I will be expecting a couple of legs on the 4-hour chart sideways to down. Okay, that will be for tomorrow. But I do not want this area to be broken down. Even if it breaks down, I would really like it if the bulls can come down to the 2527 area and bring it back above the 37. Then on Tuesday, we will have a very good chance to climb up to these highs after the CPI and the PPI. Okay, so this is all I had. And finally, what I do is every day after my analysis is done, I create this kind of a document. I create this kind of a document, right? With all the details that are in there. I print this document, I read this document again in the morning, and I try to understand what has happened overnight, what is going on, and based on that, I revise my trades. So this whole thing that will be here in my document, I also post on my Discord, on the free Discord, as well as on the on my Facebook page, right? So once this meeting is over, we will have a recording of this. I will send out the recordings to your email ID. The email will come info@gbrta.com. Right. So make sure it does not go into the spam. If it goes into the spam, just mark it. You will have the link to this recording, as well as I will put my YouTube link, the link to the Discord, and the link to the Facebook page in that. Okay, so that ends my session today. I will wait for again for a minute or two and see if there are any questions, and then we will close it out. I hope it was good information for everyone. You guys got some ideas about how to create support resistances, how you trade support resistances. So I will keep it at that for now. We will have another session next Sunday. I will publish those details by tomorrow evening, both on the YouTube page, on the YouTube video, and on the Facebook page. Okay. Thank you so much, guys. Have a great rest of the weekend, and talk to you again tomorrow. Bye.
Thank you.